When you think about global entertainment, really, what's the first name that comes to mind? For millions, it's Netflix, and its scale is just staggering. But to really get a handle on its power here in 2025, we've got to look past the logo and dive into the numbers that make this whole machine run.
Okay, let's start with the most important number of all, 301.6 million. I want you to just let that sink in for a second. This isn't just some random statistic, it's a statement. We're talking about a global community that's bigger than the population of most countries on the planet.
So, what is it? That's the total number of paid global subscribers at the end of fiscal year 2024. This single number is the engine for the entire Netflix business. It fuels the revenue, it dictates that massive content budget, and it locks in their market power. Honestly, if you're an investor, this is the number you need to watch. So, here's what we're going to do in this explainer. We're going to break it all down. We'll start by looking at Netflix as the global leader, and then rewind to see how they went from mailing DVDs to total streaming domination. After that, we'll get into the nuts and bolts of their business model, decode the financials, check out their strategy for the future, and then wrap it all up with an outlook for investors.
All right, let's kick things off with that leadership position. With over 300 million subscribers, Netflix is playing in a league of its own. It's operating at a scale that its competitors are still scrambling to catch up to. And that massive user base, it gives them a huge advantage in pretty much everything they do. But the real question is, how on earth did they get here? To really get how Netflix built this empire, we have to look back at its history. And let me tell you, this is not a story of just simple straight-line success. No, it's more like a masterclass in making big, bold, strategic moves. It's a story about a company that wasn't just willing to disrupt its rivals, it was willing to disrupt itself. It all started way back in 1997, and not with streaming, but with those iconic red envelopes in your mailbox. After going public in 2002, the company made its first legendary pivot in 2007. They launched a streaming service that they knew would one day make their own DVD business obsolete. Talk about courage. But the real game changer? That came in 2013 with House of Cards. This wasn't just another show. It was a loud and clear signal that Netflix was no longer just a distributor of content. It was a creator. This quote from the original 2002 IPO letter just says it all. Even back in the DVD days, founder Reed Hastings saw a future that went way beyond physical discs. That kind of foresight, that ability to skate to where the puck is going, has been the secret sauce to Netflix's entire journey. Okay, so that brings us to today. The history is fascinating, but how does the Netflix machine actually work right now in 2025? Well, it's a lot more complex than just streaming movies. If you look at their official filings, Netflix calls itself a global entertainment service. Let's pull out the keywords there: global, entertainment, and paid. This makes it clear they're not just a tech platform anymore. They're a full-blown media company with a direct line to consumers in almost every single country on the map. Today, the business is really standing on several pillars. At its heart, of course, is streaming content, that mix of their own original shows and movies they license from others. But layered on top of that, you've got the new ad-supported plan, a growing push into mobile gaming, a whole network of production studios around the world, and even early moves into things like merchandise and live events. It's become a whole entertainment ecosystem. So how does that all translate into cash? Well, the vast majority of their money still comes from good old-fashioned subscription fees. But, and this is a big but, advertising revenue from that cheaper plan is now a huge new growth area. Then you've got smaller, but still important, streams from licensing their original shows to others and making bundling deals with mobile providers all over the world. All right, we've covered the history, we've covered the business model. Now let's get to the part every investor needs to see, the financials. This is where we find out if the strategy is actually paying off. First up, let's look at the top-line growth. As you can see, revenue has been on a really steady climb, hitting an incredible $39 billion in fiscal year 2024. That's a 16% jump from the year before, which is a really strong sign of healthy business momentum. But hey, revenue is only one side of the coin. Operating margin is just as important. Think of it like this. For every dollar Netflix brings in, how much of that is actual profit before taxes and interest? Well, just look at that jump from 18% in 2022 all the way up to 27% in 2024. That tells us they're getting incredibly efficient and more profitable as they grow. Now, this table really paints the picture of a truly global business. While the US and Canada region, what they call UCAN, still brings in the most money, look at this. The Europe, Middle East, and Africa region, or EMEA, now has the most subscribers. This is so important because it proves that Netflix's future growth is, without a doubt, an international story. And for investors, all of this has added up to some really strong long-term performance. This 5-year chart shows that even with some bumps along the way, Netflix stock has significantly outpaced the broader market, including the S&P 500.
So the company is growing, it's profitable, but in this crazy competitive streaming world, you can't just stand still. So what's their game plan for the future? What are the key things they're doing to drive that next wave of growth?
Okay, the first pillar is just a brilliant example of turning a problem into a massive opportunity. Cracking down on password sharing, that was a huge gamble, but it paid off, big time. Instead of pushing people away, it successfully turned millions of password borrowers into paying customers, driving an incredible 40% year-over-year jump in paid net ads in 2024. It was a gutsy move, and it worked.
The second big strategic pillar is growing that ad-supported tier. And this move is like a 1-2 punch. First, it gives them a lower price to attract new customers who might be a little more budget conscious. And second, and this might be the bigger deal long term, it opens up an entirely new, massive revenue stream from advertising. This makes them way less reliant on just subscription fees alone. So, when you put on your investor hat, what are the key things you need to be thinking about? Well, you have to balance Netflix's position as the undisputed global leader and its amazing library of original content against some harsh realities, like intense competition and the ever-rising cost of making hit shows. And of course, you have to consider the stability of the new leadership team now that founder Reed Hastings has stepped back. All right, that brings us to our final section, the overall investor outlook. This is where we put everything together, put it all on the scale, and really weigh the company's biggest strengths against its biggest risks. On one side of the scale, the strengths are just undeniable. That unmatched global scale, a growing library of intellectual property that they own forever, incredible brand recognition, and those new revenue streams like advertising. But on the other side, you can't ignore the risks, and these are pulled right from their own SEC filings. We're talking about ferocious competition, the sky-high cost of making content, the constant threat of subscribers leaving, and their deep reliance on Amazon Web Services to run the whole thing. So, at the end of the day, the crucial question for any investor really boils down to this. Has Netflix successfully navigated the chaos of the streaming wars to build a truly durable, long-lasting entertainment empire? Or, with competition tougher than ever and new challenges always popping up, is its most difficult chapter still ahead? That, right there, is the multi-billion-dollar question.